Taking a quick look at oil as it stands, West Texas Intermediate down today by $1.27 to 57.02, so more than 2%. This is after OPEC Plus announced a production increase of 400,000 barrels per day in June. It is that second increase in as many months. Now, our next guest says it's not the production increase that's dropping the price of oil, but the pace that OPEC plans to take. Let's go to Rory Johnston on that. He's founder of Commodity Context. Rory, thanks for joining us today.
Thanks for having me.
Why the advanced timeline for OPEC Plus?
Yeah, so just a little bit of context here. So going into this production hiking cycle that very recently began in April, the plan was to return roughly 2.5 million barrels a day of crude from the core 8 members of OPEC Plus over what was supposed to be 18 months. Then the plan started in April. We got 1 month, went pretty normal. Then in May, immediately after the production increase for May, announced in early April, immediately on the heels of President Trump's Liberation Day tariff announcement, they announced that they were tripling the pace. So they were doing 3 months in one in May. And then going into this weekend, the plan was, the consensus assumption from the market was that we're going to see another one of those accelerated production increases. And that's exactly what we got. So just in those 3 months, we've got back almost a full million barrels a day of production increases out of what was supposed to be 2.5 million over 18 months. We got 1 million in 3. But I think so going in, I wouldn't have expected that much of a sell-off, giving it, now that we got that 400,000 barrel a day increase, because again, I think that was more or less expected. But what was less expected was on Sunday, following the announcement on Saturday, you got another Reuters report rumor around the Saudis in particular talking about how they wouldn't be against seeing this, this currently faster pace of production increases continue straight through for the next couple of months through the end of the summer and into the fall. And rather than 18 months, have the entire 2.5 million barrels a day returned by the end of October. Now, I think this is still a threat. It's really meant to kind of scare the market, to scare particularly the cheating or overproducing members of the production group, most notably Kazakhstan most recently, and Iraq more chronically. But I think that's actually what really spooked the market. But I should say, we sold off more than $2 a barrel, almost 5%, when Asian markets opened on Sunday night here in North America. But we've really clawed back more than half of that. And we're down just more than $1, which is actually a pretty small price decline, considering what that production increase would mean if realized, which would be, unquestionably oversupplied markets and lower prices from here. So I think at this stage, the market's still kind of betting that that's a threat that the Saudis in particular are not going to follow through on.
Well, that's the question, right? You mentioned this is, sort of punishment, a wrap across the fingers for some of these other countries that aren't following the rules. So how long do you think Saudi Arabia can handle a lower price on oil? And how low would it go, do you think, before they would act again?
That, I think, is the, billion barrel question, more or less. I think the other thing that's important here is I think the compliance or the kind of pushing back against these cheating members, I think is alone too small an explanation to kind of completely explain the massive shift we've seen from the producer group broadly and Saudi Arabia specifically, which for the past 2 years has very fervently and kind of durably supported oil markets with deeper and deeper cuts. So I think part of what's happened is that the market overall just seemed to be turning against OPEC, seemed to be weakening despite this continued kind of price support. So as they kind of felt themselves losing control of the market, rather than completely getting washed away with this kind of bearish, kind of tariff weighed down market, they decided rather than lean against the weakness, they would lean into it and kind of accentuate and leverage their kind of disciplinary efforts from a production increase, kind of say, look, we'd even do this through this kind of weaker bearish period. We can handle it. We're Saudi Arabia. We have access to global debt markets. Most of our kind of structural fiscal requirement for these higher oil prices is very, very extravagant project spending that in a pinch we could pull back compared to more cash-strapped members like Iraq or Kazakhstan, which just don't have that flexibility. But to your point, I think, for the last 2-3 years, the oil market broadly has been able to reliably kind of rely on the so-called OPEC put, that anytime prices drop too far, too fast, you could reasonably depend on the OPEC to kind of step in and either jawbone the market back higher or potentially even cut additional barrels to support. Now we know there's clearly been a strategy change, a disposition change. So now the question, like you ask, is how far is too far? And so far, heading into the weekend with prices, prices had briefly dropped into the 50s on a Brent basis before this weekend. And that didn't seem to deter them. So we haven't yet found that low price that the Saudis in particular are uncomfortable with.
Interesting. Okay, as you know, the U.S. president, Rory, is going to be in Saudi Arabia. I'm wondering how much of this is timed out for his meeting.
Yeah, I think it's a really good question. And one of the things I most frequently hear is that the Saudis in particular and OPEC more broadly is doing this to kind of curry favor with the White House, particularly given the fact that in Trump's first week in office, speaking virtually to a crowd in Davos, explicitly called on OPEC and Saudi Arabia increase production and lower oil prices, both in order to kind of just generally juice the U.S. economy, but more specifically to help allow inflation to come down and the Federal Reserve to lower interest rates, which is really what the White House is now focusing on as their kind of benchmark of success. But in all my conversations of anyone close to the various OPEC members, all of them stress that while, sure, Saudi Arabia, OPEC will take credit for doing this. They're doing it for other reasons. That doesn't mean they won't, when Trump is in Riyadh, say, look, Mr. President, we're doing all this for you. You're welcome. But I don't think that is the primary driver of what they're doing. And what we've seen historically from the OPEC Plus alliance is that anytime they kind of do anything at the behest of a president, particularly President Trump, with the memories back to 2018 and the rug pull from the White House around the Iran sanctions at that time, it's really not gone very well for them. So while I do think that they will absolutely mention it as a thing that, you're welcome, Mr. President, for these lower oil prices, I think those that believe that is the primary driver of the strategy shift are putting too much effort on the U.S. and not enough a weight on overall market fundamentals and the kind of necessary pivot, as well as I think a natural point of pride within the organization around this free riding we're seeing, particularly from Iraq and Kazakhstan.
Rory, good to have you, sir. I got to leave it there, but thanks for your time. Rory is the founder of Commodity Context. Prime Minister